LiteFinance,
Hello, it's a Monday and it is a time to start the market forecast for this week, in which we will receive some important macro data that should move the markets and give us some potential opportunities for trading. Okay, so as usual, let's begin with the calendar. And Monday, as usual, is a slow start. On Tuesday, we will get RBI rate decision and PMI from major economies. On Wednesday, ADP employment, BOC rate decision. So we will see basically during this week how other central banks are assessing the situation with inflation, and their reaction will give us some broader perspective on how possibly their currencies can move in the future. Later that day, crude oil inventories, which will give us a current stockpile situation of crude after last build-up and massive sell-off. On Thursday, we'll get Eurozone and Japan GDP figures, so another key macro statistics. And so finally, last but not least, Friday with NFP will give data that are closely watched by the Fed and the market itself. Now let's move on to fundamentals for the Euro-USD. So deflationary processes in the Eurozone are proceeding much faster than in the United States. In November, consumer prices fell to 2.4% year-on-year, the lowest level since June 2021. On a monthly basis, the figure also decreased. ING officials note that the chances of the ECB's imminent victory over inflation are actively growing, and declare that the European Central Bank will be one of the first to begin monetary expansion. The derivatives market predicts that this will happen in April and with a 50% probability in March. Derivatives signal a reduction in the deposit rate from 4 to 3% and give a 70% probability of its falling to 2.75% in 2024. So how can Euro-USD not fall in such conditions? Well, however, Capital Economics advises keeping a cool head. According to the company, energy prices will return European inflation above 3% in December, which will not allow ECB officials to talk about cutting rates. Sharp slowdown in European inflation increased chances of monetary expansion by the ECB, and comments from John Williams have cooled the ardor of Euro-USD bulls. So the inability of the euro to return above 1.092 will increase the risks of its decline to 1.086 and 1.08. So hold the short trades formed from 1.096. However, the potential acceleration of the Eurozone CPI at the end of 2023 and the gradual turning of Fed officials dovish increases the chances of medium-term consolidation of the pair. In the future, enter purchases on the decline, and so that will be all from my side for today. Thank you for watching, and till next time.